In today's video, I'm going to share a really juicy value-packed snippet from a fast track call. Now, these fast track calls are super high level. It is our one-on-one coaching program. It is like the Ferrari of DeFi programs. A lot of our clients have done a lot of other DeFi programs and they ended up inside fast track. The attention, the level of conversation, the mastermind element to it, plus the one-on-one is super high level. We're really proud of it. I'm going to share a snippet, probably 5, 6, 7 minutes of some really high level information. Right before we get into the recording, I just want to let you know too, Fast Track runs a little bit differently. Is the calls are had in a Zoom room, and then AI creates an awesome kind of transcript and categories of each call. So if you are in Fast Track, if you're thinking of joining Fast Track, you can just check out the call recordings. And what's really nice is the whole transcript is there. So you may decide to look at, creating liquidity pool positions and portfolios during bearish markets, mitigating risk by shorting your LP positions, exploring alternative hedging strategies. It tells you what's in it, different yield farming tactics, outlook on crypto, equities, markets, etc. And each call in Fast Track, which you get access to all the recordings, by the way, when you first join. You could be busy for a couple hours going through some juicy stuff. JLP, Camino, NX Finance, and if you click on it, you can go straight to where those things are discussed. So you can see if I zoom in here, we're discussing JLP. I know there was a discussion on Camino and basically different lending protocols there, etc. And then get this, this is the level of client and of investor inside Fast Track. We have people from our minimum is $25,000. So we ask you to have $25,000 minimum to invest. If you have more than 25K, you're going to love Fast Track. But we do have some clients in here. Look at this portfolio that we've been kind of helping build. $1.3 million in very safe, wide range, blue chip for the most part type stuff, doing a 50% APR, but a 1.3 million bucks. That's a juicy APR. I mean, I'll rip out my calculator here. Yeah, that's $650,000 a year in really wide ranges, and we've been kind of helping clean up this portfolio a bit as well because it's gotten a bit messy, which is part of the learning curve. So you'll see people with 50K deployed, and you'll see people with $1 million, and then our biggest investor has $18 million deployed. So you get access to the team that helps manage and helps build $18 million DeFi portfolios, which is wild. If you're taking this stuff seriously, you don't want to waste time. You want to get to work. You want to get to business, and you want to get into the good stuff and surround yourself with people who are doing this full time. And this is their passion. This is their livelihood. This is what they do. Then exploring Fast Track may be up your alley. With that said, without further ado, I bring to you a recording from a Fast Track mastermind call.
Pairs all kind of pull together, right? There's a lot more pairs that become correlated.
Yes, and so let me take a moment and just explain that thesis real quick. So let me go ahead and share my screen, and let's dive into that. So I'm going to use traditional markets to explain this because I think that there's they're very similar in an opposite way. Did that make sense? Similar in an opposite way? Maybe not, but let me give it a shot here. So when equities move lower, volatility blows out to the upside. And when they move lower by a big enough amount, then the correlation of everything moves towards a positive 1.0. And so what that means is when equities really sell off, then everything gets sold. Gold gets sold, Bitcoin gets sold, oil gets sold, everything gets sold when equities sell off. And so what that results in is this permanent state of put skew, meaning that traders, investors are willing to pay a premium for downside protection because in equities markets, things move to the downside faster, typically, than they move to the upside. And so there's put skew because traders pay a premium for that protection to the downside. Now, in crypto, it's exactly the opposite. In crypto, there's call skew. If you take a look at the Bitcoin and ETH, term structure on the CME options, there's skew here to the upside. So calls tend to be priced at a premium to puts. And that's because in crypto, when things rip to the upside, everything moves higher. So when Bitcoin really runs, like here, when Bitcoin really runs higher, it pulls the rest of the market along with it. And so we see the correlation of everything in the crypto space move towards a positive 1.0 as Bitcoin rips higher. So that's what I was referring to with correlation moving towards a positive 1.0 as markets run to the upside. Now that's when we want to be in those correlated pairs. And Bitcoin, ETH, Sol, Bitcoin, ETH, Sol, BNB, TON, AVAX, these blue chips, you'll see them running to the upside by 10% per day, every single day for weeks together. And so in that instance, if you're in like TON ETH or Sol BNB or Render Sol, or literally take your pick, any of these correlated pairs, they will become more correlated as Bitcoin starts to rip higher. And so assuming you choose wisely and find a pair that is extremely tightly positively correlated, then you could potentially, set a wider range like David Hay was just showing, because that seems to be a little bit easier to manage, and just let that pair stay in range and appreciate against the dollar and earn fees at the same time. So, the
Sean,
goal.
do you have a trigger at which point you're going to say, okay, when this happens, I'm going to convert it into
David, hey, do we have a trigger for alt season? Let's look at the total three, David.
Sure.
Pull up the total three. Absolutely. I'm looking for a couple of things. Number one, I'm looking for, so you can see the SMA, you can see that green line going through. I look for validation of multiple things. Number one, we see a descending channel, and we could draw just a simple descending channel. I look for validation of the break in the current trend, which is the descending channel. I look for a validation of a break above the SMA. And then if I look for a break above resistance and I have three validations is key, man. If I see a validation of 3 points, because I can see the trend break, right? But if I don't see a break, it could hit resistance against the SMA. And then I have a resistance again at 775 roughly, 775 billion. When I see a break of that, I better be in altcoins.
Okay.
I'll give you my phone number. You can text me.
Well, you can actually set alerts on this. You can set alerts in TradingView.
Very valuable what we are talking about.
Alerts on it.
Definitely. Yeah, I think it's very valuable what we are talking about today, because what I'm learning from this is that during a bull market or during a lateral market or a bear market, we want to have very different behaviors and very different approach.
Yeah. And so until I agree. Yeah. And so until then, I'm packing my bags on alts, right? I mean, you can see right now the price on alts is very low. Would this be a good time to enter some of those? Absolutely. I think it's a great time to enter some alt pairs. If you set it wide to the high side, you can achieve some great asset valuation, appreciation. I mean, look at that. We have a potential gain of 28% to the high side just on all alts in general. That's the average, right? That's
just to get back,
Sol.
just to get back to the highs that we saw in March. That's 40%.
And that's including Sol and BNB and